This is Eric Muathe with Muathe.com. What I wanted to do in this quick video was a follow-up to a video I did yesterday or uploaded yesterday, where I was talking about long-term trend lines, and I was using ICE in this video here, discussing mainly how the RSI can be more reliable sometimes in giving us better trend lines, as you can see on the red line there in the video. And again, so if you want, you can go back and check this video. Right here. Now, a question was posed to me as regards whether using a log scale on a long-term basis can be a better view. And yes, it can be. So let's take a look at the same chart from a log scale view. And here we can see the normal view without a log scale. And this is the trend lines we get out of it. You can do it like this, or even another trend line. And I'm connecting the monthly closing lows. Now let's compare this. Now, of course, we know that the RSI gives us this trend line here. A little bit different. Let's take a look at what we get when we use the log scale. And you can see, using a log scale, if we take the lows here as an example, we can see that it gives us a trend line closer in terms of what it is telling us, similar to what the RSI is showing. So using a log scale does help give us this view of a potential major break if it happens, either as shown by the price using a log scale or as shown by the RSI. So clearly using a log scale, and we can even take the lows on an intraday basis, and we can see again we end up with a similar looking. So if we take the intraday lows over the years and draw a trend line, it looks something like that. Clearly this is a different view from the non-log scale view. You can see if we take the lows here, connect these lows, this is a trend line you get. So yes, using a log scale can be of some help in visualizing the long-term ramifications of a trend line break. Let's take a look at another idea here, or another instrument, and this is a Dow Jones Chilean stock market index. And what we're going to do here is, this is without a log scale. Just notice how the trend lines look over the years. Something like that. We can even draw a recent one here. Now that's the view without a log scale. Let's plot in a log scale view. And now we can see very different trend line. You can see this trend line is now clearly something to watch from a log scale, because at some point a break of this trend line does suggest a major change in the behavior, suggesting high possibilities of a big down move. So yes, using log scales can be major help in understanding the long-term view, especially as relates to trend lines. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. I see.